I hope you all enjoyed the gala dinner yesterday. And thanks for joining us this morning here. As always, we are going to have a panel discussion with the chairman of the IREPAS committees this morning. Let me quickly you all know them, but let me quickly introduce once again the chairman of IREPAS committees, starting with the Raw Material Suppliers Committee, Mr. Jens Björkman, representing the committee. Mr. Dan Baysal is representing the Traders Committee, and Mr. Murat Cebecioğlu is representing the Producers Committee. They will be sharing the findings of their respective committee meetings with us at the beginning of the session, and then we will continue with the questions and answers. Gentlemen, shall we start with the Raw Material Suppliers Committee, Jens?
Right. Good. Thank you. Hello, everyone. So I'd like to start just by saying that we're happy to be here back in Istanbul, allowed to see each other again, and what an event it was. We've had record attendance from the raw material suppliers. We were more than in excess of 100 people, delegates, and I think from 50 different companies. And
51.
Fantastic attendance, and which just proves that we need to, we need to entertain each other, see each other, and we've been longing to do this for a while now. And the pandemic, which was locking us away from each other, led to all these issues with semi-conductor shortages, component shortages, and freight rates soaring through the roof, 5 times higher than normal, which led to stimulus and to get economies back into business again, which pushed up inflation. Just as that was finishing off, Russia invades Ukraine, and which leads to not only shortages of components but also raw material shortages, and with high inflation rates, we have monetary tightening. So and then on top of that, we have a zero COVID policy in China, which has been weighing on growth for the sector, and of course China is more than 50% of demand for raw materials. So this has been a really shaky period, and as Yahuda said yesterday, he thought he had seen everything in this trade for the past 30 years, but apparently not. We still have a lot of uncertain outcomes of the ongoing difference. Period is really strange with the war. We don't know what's going on with that, and how China will cope with the opening up. They will say that they start opening up tomorrow in China, in Shanghai, and if that will lead to setbacks. But at least that's some form of trial to regain traction. Short term, there was a large shortage of iron units when the war started, and there still is pockets of shortages. We see it, for example, in the automotive sector, where production is not according to demand. The demand is strong, but production is slow because of shortages of components, of parts, and which also leads to scrap shortages for new production material, for example, in Europe. In Europe, we also see high energy costs weighing on producers and business, and high inflation pressure, which is forcing industry to slow down, idling in the coming months at some producers, which which on the demand side will be negative. At the start of the invasion, we saw supply chains were shattered. Prices for all the ferrous units were strengthening considerably. We haven't seen these price movements since 2008, and we saw pig iron hit $1,000 per ton. There was a lack of billets, there was lack of slabs, and production was moved to where there was capacity, for example, like Turkey and China, India. As an effect, India imposed export duties, so the trade was hammered again. Slowing China has put pressure on markets, considerable pressure, and Asia has had lower finished steel prices than what we see over in this area, which then also weighs on the demand from, for example, this market here. So the possibility to do export business from where there is capacity has been difficult, which has been one of the major drivers of the recent return of prices from the very strong levels we saw immediately after the invasion. Business-wise, it seems we've seen some trading going on at the current levels we see now. Perhaps a little bit of an overhang of scrap still, because of the last period we've seen for the past 2 months of inactivity during the very strong pricing period, which itself leads to short-term high scrap flows. And there's still suppliers figuring out what to do with unsold stock. So that's weighing on the current market conditions, but possibly a little bit of reorganization with China opening up, and if they do, could lead to a bit of stability for commodities. But like there will still be setbacks, and for the short term it doesn't look great. And as I said, Europe is weighed by energy costs, and we also see in Europe now, for the future, we see a lot of investment activities and announcements to either shift metallurgy towards electric arc furnace from blast furnace production, but also new greenfield production for sort of green steel production. And the buildup of EAFs is also going on in the North American market. We see it here in Turkey, and we also are currently experiencing integration from the steel sector, are integrating backwards into the raw material supply, to try to sort of at least secure raw materials. On top of that, we see now also the EU is pushing pretty hard. At least some are pushing hard for waste export ban, which will go to the plenary, I think, in November 2022, and that could lead to a lot more bureaucratic handling of the commodity trade that we are handling, and that does not seem compliant with the World Trade Organization. So it could be a bit of it could take some time to handle that, and how to handle broadly equivalent conditions, which is being discussed, and that is itself an indirect discrimination, which doesn't work well with the World Trade Organization. So The session was lively. We had a great discussion, and yeah, a lot of challenges going forward. Thank you.
Thank you very much. Shall we continue with the traders?
Well, good morning, ladies and gentlemen. Again, welcome to the 86th IREPAS conference in this magnificent city of Istanbul. It's such a pleasure to see so many attendants after the 2-year COVID interruption. For the traders session, what we do is we ask the participants to send us their questions, and we try to analyze and find some answers to the questions. So naturally, we had many questions on Ukraine and its impact, especially on Europe, because of its proximity to Ukraine. We concluded that initially, in the first 2 months, it was everybody got panicked. There were panic buying, and which is the reason why the prices were jacked up. And but later, especially after the Russian steel, particularly billets, started to come to the markets with the countries that don't recognize the sanctions, the prices eased and things went back to pre-war levels. We also discussed the scenario, optimistic scenario, after the war, what happens to Ukraine. We concluded that there'll be a lot of money, financing needed, and we thought that this financing most probably will come from United States and EU, similar to what US did after the Second World War, the Marshall Plan. There were discussions on scrap price, which obviously went up dramatically and went down again. So question was, do we expect further decreases on these prices? But we concluded that we are probably at the bottom of the curve due to the shipping and collection restrictions and, of course, the war. So the prices probably will not go down much any further. Another subject was India, their action of adding 50% tax on iron ore, 15% on hot rolled coil. We concluded that India is really less than 3% of the world iron ore exports, so the effect on the iron ore business probably will be insignificant. However, the hot rolled coil will create some interruptions. Actually, the bigger buyers of hot rolled coil, of Indian hot rolled coil, is Europe, mainly Italy and the United Arab Emirates, and you probably will see some price increases there, or maybe no further reduction in prices there. And obviously, domestically, the prices will come down. I mean, hot rolled coil price will come down, which will assist the pipe producers, which export pipe to the rest of the world. Another subject was China. Obviously, it's the biggest producer in the world. Discussions were on the COVID-19 restrictions in China. But we were told that the restrictions is only in the Shanghai region. By the way, it's a huge region, as big as Germany, but it is limited, and all the factories are running, and the ports are, yes, congested, but still running, and the shipments are delayed, but maybe 15 to 30 days max. So life is really back to normal. Another thing that to recognize is the Chinese decision to put into the market $5 trillion worth of yuans. And if that really comes true, you will see a Chinese economy going way up again. Discussions were on Turkey, and there were concerns of what Turkey will do after the US and EU sanctions. You know, Turks are very creative people. They'll probably find ways, but at least we said that there's Southeast Asia, South America, and Africa would be the next destinations for the Turkish steel. Africa was a question, and on the Africa, there were discussions whether Europe now can sell to Africa because they have, because of the Chinese restrictions or difficulties in coming to Africa. But the conclusion was that the Chinese materials are still arriving, and Turks are filling the gap. And with the high European prices, we don't think that Europe has a chance in Africa. That's all we discussed. Thank you very much.
Thank you. Let's hear what the producers have concluded.
Again, welcome to 86th biannual meeting of IREPAS to Turkey. And it's good to see you all face to face after more than 2 years because of COVID. Welcome again. Well, I'm not going to tell you anything much different than what my colleagues have already said because we're in the same pool and we share the same problems in a way. So this is exactly what we also have discussed in our meetings yesterday. Usually what we do is that in producers meeting, we discuss, as always, economic and sectoral problems by the representative of each country. But it was clear that there were two major problems, Ukraine and China. And as my colleague says, China problem be solved quicker than Ukrainian problem. And that will also probably give breathing space to all of us. On the other hand, when we look at the Russia war, it needs to be solved as soon as possible, as quick as possible, before it gets any worse. This war moved all the stones actually, broke supply chain, changed supply and demand balance in the market for many countries, of course, increased prices because there was a sudden panic buying in Europe. Some countries bought more than they needed to buy, probably thinking that tomorrow they will not be able to reach as much quantity as they might need. That, of course, pushed the prices up. But later on, things have slowed down a little bit, and then the prices came down for now. Of course, the supply chain is broken. See what happens, and that's an important thing. So we have to see and follow what happens. If we go by country, it's been said that Yemen, there are peace talks going on. You know, Yemen, I don't know if you're aware of the fact that Yemen is in the top 3 export countries for Turkey. So this is important, and it's been said that there are peace talks going on, and if that happens, there would be more demand in the market in Yemen. In Philippines, there were, you know, there were elections, and there was this new president. There was doubt about that, but after the forming of the cabinet, people were satisfied and welcomed the new government there, and hopefully things will be much better there. That's been said. In UAE, they probably, I mean, it's not probably, they produce more than they consume, and they export to many countries now. They used to be importers, and the way of doing business has changed, of course, throughout the years. Today, importers became exporters, like most of the GCC countries today exporting. Even Oman is exporting into EU countries and in good quantities. And in Kuwait, there are also some political problems. Demand is kind of weak. Time to time, they also import within GCC. When we look at Europe, especially in Spain, Italy, Portugal, I mean, Mediterranean part, same problems do exist. I'm not going to go through again, not to waste your time. But again, inflation, unemployment, all these problems seem to exist in these countries as well. When we look at Turkey, Turkey exports to many countries. This Ukraine-Russian war gave a little bit chance to Turkey because Turkey was the only alternative to these countries. So it filled the gap and had the chance to export more to Europe, much above the quota levels. And Turkey is also exporting, of course. And we used to export a lot to Far East and Southeast Asia, but this year, because of China, it's not possible. But Israel and Yemen, Turkey is number one and two export for long products, for rebars especially, markets. Besides that, Turkey exports to South America, USA, Canada, Africa, all around. All in all, it's all agreed that the outlook is positive and the good days are ahead. Thank you.
Thank you very much, Mr. Chairman. Let me try to recap what I have heard already. Well, I understand everybody's complaining about shortages. The uncertainty is a huge issue worldwide. The uncertainty created by obviously by the war first, and then the situation in China. All these problems with the supply chains and the shortages in different sectors, different commodities, in several raw materials, semi-conductors, and so on. But on the other side, the situation in China is expected to be solved in sooner rather than later, which is hopefully will be a good, which is going to have a good impact hopefully on the market. Once the war is over, I understand financing is expected to flow from US and EU to Ukraine, which will also be helpful for the steel industry, obviously starting from Ukraine and worldwide. It was interesting to hear that the Indian pipe exports is expected to increase following the new export duty regime started there in that particular country. The inflation situation, unemployment situation are also headaches, but it was good to hear that outlook is still positive. Thank you very much once again, gentlemen. And I'd like to continue, if you permit, I'd like to continue with the questions that we have gathered. Once again, I will be directing the questions to you one by one, but whenever you'd like to have a comment for any question, please do let us hear. And if you have any questions from the floor, please stop me at any time, and let's try to direct your questions to the chairman of the committees. We'll start with a question from the floor, if you allow us. Go ahead, please, Mr. Sarı.
Good morning.
Good morning.
Süleyman Sarı, Link Inspection. Yesterday, the speaker, Mr. Özgür, said that nobody is independent, and we have to reconsider it, because as per my establishing that, the gap between the fastest in the first and the last is 100 years in the world. And the politics became the major problem of the world. And the businessmen who are establishing a factory or business continues minimum 50 years, 100 years. So the business should be more effective in this situation, each sector than the others, because politics life is only 10 years. And the business should be more effective in the social life of the world. This is important for future also. This is my comment. Thank you very much.
Thank you. Thank you.
Well, if that was a question, of course, the world is all intertwined, especially with our initiative of the world working with each other, and so yes, because our economies are all interrelated, nobody's economically independent. Obviously, each country is independent by its own, make their own decisions, like the Russians are making their own decisions. But economically, again, like the Russians see now, they're not independent. They will be affected. So this world does get affected from any movement from any part of the world. If you can see, Europe is thinking what's happening in Ukraine, because it does affect them, and it does affect even all the way to Canada and America.
It's a much smaller and interconnected world. Another question? Or is it a comment?
That's going to be a contribution for the raw material supply. During the COVID period, we have noticed the disruptions in the sea freight. And starting from December, we have seen large companies trying to focus iron ore supply from Africa, starting from Mauritania, Zimbabwe, Senegal, Angola, New Guinea, Liberia. So we can see that there is a shift, and the countries are going for more self-sufficiency, for instance, in GCC. Regarding the traders, the current lockdown in China, as the domestic consumption is low, the production continues. That brings the prices still workable for the export markets. So we don't see any price hikes in terms of the semis and finished material originated to China. So should we praise to that, or should we be regret of it? That's a question mark. And also producers committee, kind of contribution. GCC countries are investing a lot in green hydrogen and green ammonia. I think that should be a concern of Turkish producers as well. Yeah, thank you.
Thank you. Would you like to comment on the question side?
I'm sorry, I really didn't understand the question on the trader side. If you don't mind repeating one more time, I will very much appreciate it.
Can we have the microphone once again?
So the lockdown in China, the domestic consumption is low. That means that the quantities that has to be exported, because the production continues. And although we are quite unhappy with the inflation, but the prices do not hike, for instance, for the HRC. So what I'm saying is, should we praise to the lockdown so that the domestic consumption is low and the prices do not hike, or should we be regret of it?
Well, when they say that the production continued as normal, obviously in a certain region when there's lockdown, there are some interruptions. It's impossible for it to have no interruptions. So, but China has not been a major exporter in the last few years. So really, worldwide, it didn't make a whole lot of effect. Shipping was a major issue because shipping was delayed. But the countries that's buying from China, with the prices being so low, that they really didn't look for other sources, because Chinese were still one of the major suppliers to them. However, we did see some change where the Turkish steel did end up going to those countries where China used to dominate.
Thank you very much. So I'm moving on with the questions we have gathered. Yep. The first question is for traders once again. Having experienced severe disruptions caused by the COVID-19 pandemic and then by Russia's invasion of Ukraine, namely supply chain disturbances, logistics-related hardships, a consequent sharp rise in prices, etc., would you expect the global steel industry to develop towards regionalization or to maintain its development towards globalization in the upcoming years?
Okay. I think the regionalization, or shall we say the protectionism, started with the Trump administration in the US, which followed by European decision on the steel quotas. Lately, this movement continued in a new dimension and a faster way with COVID. With COVID, the producers that realized that they should have their inventories ready because of some unforeseen interruptions like COVID. Supply chain issues started with COVID and got exaggerated when all ports get congested, when most of the products start coming all at the same time. Ukraine war was really a major addition to the problems, and it took the whole thing in another level, especially for the European manufacturers who depended on Ukrainian and Russian supplies for their production. I can say globalization got a big hit with things will never be the same. In US, there's serious movement in easing up this just-in-time inventory idea, supporting now the local production for the faster deliveries. There are new investments for local production, like the chips, and increased domestic and regional steel production in places within the country and also like proximity like Mexico and Canada. That's all.
Thank you very much. Moving on to the next question, and this one is for producers. How has the Turkish long steel industry been impacted by the war in Ukraine, for example, in terms of its raw material supplies, costs, export opportunities, and other issues?
Well, thank you, Murat. Well, I think I've answered this question when I was talking about the Producers Committee findings. Once again, Ukraine and Russia were two major suppliers for Turkey for raw materials and semi-finished material. And therefore, Turkey has, in a way, kind of affected negatively getting these materials. But on the other hand, Turkey had the opportunity to sell more to other countries, replacing Russia and Ukraine, because Turkey was the only alternative. And Turkey sold more than its share to Europe. And the prices have increased because of this, gave a chance for everyone to increase their prices. And on top of that, EU distributed what is allocated to these countries to Turkey, some part of it. So this gave Turkey a bit more chance to increase its share in the EU. Basically, there were negative points and positive points, but this was basically what happened due to war in Ukraine and Russia.
Thank you very much. Next question is for raw material suppliers. Obviously, everybody is very much curious about the market trend. So this one is on the market trend. Do you think international scrap prices are approaching the bottom? Do you expect them to rebound strongly in the coming period? What factors should we keep an eye on? What role will be played by the significant volumes of Russian billets which are seeking buyers overseas? To what extent will these continue to have a negative impact on global scrap prices and on Turkey's import scrap market in particular? When you answer this question, everybody will leave.
No, this is such an easy question to answer. Yeah, so there's a lot of questions in this question. Yeah. But so generally, for the past year and a half or so, we've been trading in this span, $400 around like plus minus $50, and during the last 2 months, we've seen, of course, price movements that we haven't seen since 2008. and that was as an effect of trade disruption and war impacting actual trade. So that's of course a short-term effect. We had prices move down $220, but that's after they had also gone up by about that amount. So we're actually at a level now which we've been at for quite some time, at plus minus, of course. So my expectation is that we are most likely at the level we will likely be for the period where steel demand and the steel prices are at the current levels. Because the amounts of the costs in production and transportation and these points are already built into the margin in production. So at the moment it's as though the war in Ukraine was over and it's normalized. So, and that's not the case. So there is still a lack of iron units from the Black Sea and Russia, which is under sanctions, and so there is still a real troublesome period of availability and possibilities, but in general we are likely at the level where a normal price is. Maybe it goes down further. There is currently an overhang of scrap that was accumulated during a period of very high prices, which normally brings in a lot of tonnage, and so there's likely a downside risk. But in general, I would think that these levels are tradable.
Mm-hmm. Mm-hmm.
Yesterday, I heard that, and you kind of talked the same thing, that it's possible that Europe will put tax on exports of scrap. Crazy idea, but if that happens, the whole equation changes, doesn't it?
I haven't heard about taxes on exports, but they are at least looking into waste export ban, which more or less is supposed to be an export ban on waste, i.e. like plastics that go into the ocean or end up in Africa. But since the commodities that we're trading are also under a waste regulation, the commodity itself is now under that kind of ban risk as well, which of course the European steel industry is not against. So that's a challenge itself.
Major challenge.
Major challenge. That may be a game changer. Okay. Any comments from the floor or any questions? Peter, right? I cannot see. Yep.
I have a question to Mr. Baysal. Do you think America can put export ban for scrap? Do you think it's realistic?
No, it's impossible. We have free trade and free economy. Well, Trump changed most of it, but
this is the question.
Yes. Well, a lot of things that I thought would never happen did happen, but I'd like to say no. It's not. It can't happen. It shouldn't happen.
Okay. Thank you very much. So let's move on to the next question, gentlemen. This is for the traders once again. How have Russian billet exporters been successful in circumventing the sanctions imposed by Western countries following Russia's invasion of Ukraine? They have been supplying volumes to China, Egypt, and Turkey, to name a few. Do you expect the Russians to continue to have outlets in the export markets, or will they come under increased pressure from sanctions?
Well, I think time will show how things will play out, you know. I think the sanctions will, you know, increase, but maybe not before the year end, and hopefully the war will be over by then. Circumventing issue for the US is almost impossible. And because we have really serious precautions for that. I understand Europe has the same precautions for it. Of course, Russia will continue selling its cheaper steel to certain countries that then don't recognize the sanctions. And I understand the payments are facilitated through the intermediary countries like Switzerland and Dubai. So I don't believe there will be an increased pressure, but there's already a pressure, going on in this matter anyway.
Thank you. So that means we should expect more imbalance or arbitrage opportunities in the market, right? Any other comments from the other chairman or from the floor on this particular subject?
The only thing I can say, just before entering, there was this guy from Iran, and he went to Alex from Noris Metal, start complaining, why you dump the material?
That's good.
Maybe he's here now, I don't know.
From Iran, from KSC, Kyrgyzstan?
Yeah, Kyrgyzstan.
Do we have representatives from KSC? Oh, yeah. Would you like to comment on that?
I can't hear.
No, what I said in the morning, one of your colleagues approached Alex from Noris Metal complaining that he was dumping.
Maybe we can see some anti-dumping case in Iran. We'll see. Okay, thank you very much. Let's move on to the next question. This is for the panel. The EU and US sanctions against Russia have failed to impact trading with Russia. As we know, a lot of companies continue to import ex-Russia goods. Do you expect the West to introduce full-blown sanctions which would impact global supply? You have already voiced your opinion on that.
Well, there are many politics going behind this, of course, and that needs to be watched closely. We don't know what's really going on when they are talking to each other. But today I heard, if I'm not mistaken, most of the European countries have stopped buying oil from Russia.
Most, not all.
Not all, except one. I think it was Hungary. I'm not so sure.
You mean directly buying?
Yeah, yeah.
Indirectly, they're still buying.
Oh, okay. It's a different. Everything is happening indirectly today. Russian billets and materials are all around.
Right.
So, well, it needs to be seen and see what happens.
And it might not be so easy to. I mean, okay, the Russians' billets are still exported, but to re-export steel, for example, from Turkey on Russian material will most likely not be allowed by European Union and the US and other nations, I think. So it might be problematic to trade anyway.
Mm-hmm. Okay, thank you. Let's move on to the next question for traders again. Following the imposition of sanctions by the West against Russia, are there any winners in the global steel market today? Or will there be any in the long-term perspective? Will the situation change in the coming months?
Well, I think when there's a war, there's always some winners and some losers. However, the people or the citizens of each country are the real losers in this business. In this case, the uneven applied sanctions does create certain advantages to the countries that don't recognize the sanctions, like China, Egypt, Turkey maybe. In the first few months of the sanctions, prices went up, especially in Euro region, and the European producers did benefit from it. Since then, the panic subsided. Russian steel started to flow into the markets. And so really, I don't think there's absolute winners, but the countries that don't recognize the sanctions have the upper hand and advantage for a short time period.
For a short time.
Right.
That's the key. Thank you. Next one is for raw material suppliers. How long do you think the global shortage of pig iron will continue to affect both iron ore and scrap prices?
Well, the shortage of pig iron initially after the invasion of Ukraine was dramatic, and the pricing of pig iron was at levels we haven't seen in a long time, perhaps never. And that had a huge effect on both iron ore and scrap prices. At the moment, possibly not as much, but the shortage of pig iron is still there because of the lack of supply. And India has had introduced its export duties, and we also see perhaps less demand in China after its COVID policy. So perhaps that has dampened the demand a little bit, but there's still shortages of pig iron, and it may have an effect on iron ore and scrap prices. But at the moment, the situation is calmer and the prices have come down.
I think we sometimes look at it as globally and say, well, if there's a problem here, another country can change this. But I know that we're buying from Czech Republic, and the pig iron became a major issue. So our production got delayed, and we're like 2-3 months behind, and we're not really sure when we're going to get our products. So it's serious. I mean, sometimes when we say, well, we can get it from India, or you can get it from South America, well, yeah, you can. It takes time, real time. So interruption is serious. And it's not necessarily the pricing, but interruption is serious.
Yeah.
Russia and Ukraine represented more than half of the international trade.
Exactly.
Supply terms.
And we hear a lot about shortages of pig iron in Europe as well, and the US.
Yeah.
So, and specialized steel mills or foundries that have previously run on Russian material is currently in a really severe situation.
Yep. Okay, thank you very much. Next question is for the panel, once again. How do you see the current situation regarding freight and shipping costs? Are high freight rates here to stay? Are there any particular factors we should pay attention to, like shortages of containers, congestion at certain ports, or other issues? Are we likely to even see further rises in freight rates due to increasing fuel costs and inflation? Are higher freight rates a significant factor in the regionalization of the long steel trade?
Let's really start saying that the higher freight rates and congestion at the ports, especially in the US ports, are a significant factor in the higher prices of steel. Congestion will ease slowly. It may take 6 months to a year, but freight rates has to really ease as well, especially the container rates. I mean, today the container prices are double, quadruple, and which is really not sustainable. We think the container lines deliberately pulled out the old containers out of circulation, causing some of the shortages. But I believe in, free economy. Others will get in and produce boxes. Situation will eventually change. Same may be true for bulk carriers. Soon there will be more ships being built with these nice prices, and that will change the whole equation. However, all this will take time and will be gradual, so higher prices, unfortunately, are here to stay for at least the balance of the year.
Mr. Chairman?
Well, it's a fact that higher freight rates are a significant factor on long steel trade today. They are more than doubled. Like the freight for US used to be around $25, $30 today, not less than $65, $70. Same for Israel. And when you look at Israel, there is congestion, which is like a vessel waits minimum 3 to 4 weeks. And that, of course, increases the price. Where we used to ship 5,000 vessels to Israel around $25. Today, they ask for $70. So this really has a huge effect on steel, long steel. I mean, not only longs, but in every kind of trade with bulk vessels. But when you look at the Baltic trade dry index, actually, I think it's more or less the same as last year. But China, with the COVID restrictions, closed most of its ports at one time, and that blocked many ships. They put many ships out of business, and that created, of course, a big problem. I don't know how soon this can be solved. Really needs to be seen. I mean, I just cannot say anything certain that this or that, but we have to see.
Doesn't look like there's a solution anytime.
Not very soon, I don't think so, because this has been going on for a long time and nothing has changed.
Any additional comments?
Well, strong freight rates normally leads to ship owners planning new buildings because they want to have more of that income, and normally that depresses the freight rates, and we see that coming online during next year. The major container shipping lines are adding to their fleets, which will have put pressure on the freight rates. And also, of course, the China and the US congestions are adding to the problems at the moment. And not only shipping is an issue, we have land freights, which we don't have enough trucks in the US and in Europe. So we have containers getting stuck inland, especially in the US, which is a problem to get the containers back to the terminals. So there's a lot of points that are a problem, but we will likely see a return.
I think the port congestion is not only because all the ships are coming at the same time. We have a labor shortage in America. We have a serious labor problem. I mean, because of the labor problem, we have a trucking problem because we can't find drivers. We have the trucks, but we can't find drivers. So when the material comes and gets offloaded in the US ports, we can take him out. We cannot take him from ship side to inside storage. I mean, I have cargoes waiting, trust me, a month getting from the ship side to inside storage. And I'm talking about rain-sensitive cargo. It's crazy. The shortages that we have on labor is crazy. So how will that change? I don't know. We have to open up the borders and bring more people.
Well, that's a good political issue. Okay, thank you. We actually have colleagues from the shipping industry among the attendees of this conference. Are there anybody from the shipping industry this morning in the room, or to have a comment? Not, no? Okay. Yeah. Okay, let's move on to the next question then. This one is for Raw Material Suppliers Committee. China has been going through one of its most difficult periods during the pandemic, with lockdowns in major cities and tight restrictions across the country. China is also aiming to reduce its crude steel output in 2022. In this overall context, its demand for imports of scrap, billet, iron ore, and other raw materials has shrunk. Do you foresee this situation continuing to have a depressing effect on global raw material prices in the coming period? You have already answered this up to a certain extent.
Yeah.
Any additional comments?
Well, one of the major positives in global trade and pricing is that China has not had such a huge export of their steel products like they did in the early 2010s. And that's at least what they're saying is a policy to draw down production in accordance with local or domestic demand, and not export huge quantities in order to be able to maintain a high production rate. So that's a positive for global trade. But in general, I think the last period in China has been due to, of course, its COVID program, and we will probably see that become a little bit stronger going forward, unless, as some say, the COVID restrictions remain until November, when Xi Jinping holds the next when he gets elected for his third term. Yeah.
Thank you very much. Moving on to the next question, and this is for the panel. Has there been any significant shift in trade flows following the agreement reached at the start of November last year between the EU and the US regarding the latter's Section 232 tariffs? Has any appreciable space been opened up for steel imports into the EU market by increased steel exports from the EU to the US? If so, which supplier countries are the main beneficiaries? If there is
no. I don't think there has been any significant space opened up from EU to USA. I mean, traditionally, Mediterranean countries are exporting to US, Italy, Spain, Portugal, but they used to export about cargo a month. Today, they cannot even do that, and they have quarterly quota, which is much less than what they used to do. I was talking with some of the colleagues yesterday also. I mean, I don't think it made any difference. I don't know if you guys agree or not, but that's how I feel.
I also really think that nothing really changed, and European mills that were selling to the US, their specific type of steels, are still selling the same. And with the quota, now they have 20-25% higher prices that they can enjoy. Basically, on the question asked, in the 6 European countries, namely Germany, Netherlands, Italy, France, Spain, and Sweden, have each, around over 200,000 ton quota, which is not much. But Germany has a 1 million ton, and Netherlands, the small country of Netherlands, have 500,000 tons as the quota. But really, if you ask for who's the winner and loser, the loser are the rest of the countries that are denied the free trade that U.S. has been preaching since WTO started. However, really the biggest loser is the U.S. taxpayer. All exempt countries increase their prices by 25% to equalize with the rest of the world, okay? So the prices in the US went up 25% and it still is the highest price in the world. So the Biden administration is struggling to lower the inflation. They talk about it every day. As the steel traders of America, let me give a simple message to our government. I hope they're listening. If you are seriously concerned about inflation, take out the 232 sanctions. Take it out. If you do, all steel prices will come down 25% overnight, which will be a significant factor for reducing the inflation. I mean, yesterday, Dr. Dimitris was stating that he's not sure, and I'm not sure about their serious intention to lower the inflation, because this is the fastest and absolute solution to lower the inflation in this country.
Thankfully, we don't have any representatives from US mills today here.
I hope to.
Okay, so moving on to the next one, if there are no more comments. This one is for traders, once again. The US dollar has gained strength following the interest rate hike by the US Federal Reserve. What influence is the stronger dollar having on trade flows and prices? Can we expect to see the US significantly increase its imports of long steel products?
Well, I think the strong dollar is only one factor in affecting the steel imports. The biggest factor is the US economy and its growth, Unfortunately, there are signs of recession and stagflation in the country. If this really becomes a reality, a strong dollar will not be enough to support the imports. By the way, the main imports in the US is flat products, not long products.
This question was on longs. Okay, moving on to the next one. This one is for producers. As the US has come to an agreement with several parties, namely the EU, the UK, and Japan, to replace its Section 232 measures with quotas, Turkey is becoming less and less competitive since it is still subject to the 25% duty. Do you think this has caused a contraction in Turkey's market share, and what steps can be taken to secure a level playing field? It has already been mentioned that...
Yeah, we have already talked about it, but there's also another thing that the local market in Europe is quite high. So I don't think it's worth for them to export to US today. Because they really have to come down a lot. In Europe today, the numbers are $1,100 to $1,200, and more or less the same in US. US has always been a good market for Turkey. Because of the high prices, it was not so much possible and feasible to sell to US when the prices were around $900 a couple of months ago. But today, with the numbers we have, it's quite possible, and there are deals already being made to sell to USA. Again, as I mentioned, I don't think this EU, UK, Japan is not an obstacle for us to sell to US. As long as we have these prices, it's always possible to sell. It's a matter of pricing.
I think it's hard to compete with countries that are exempt, like Mexico, Canada, you know, so even Argentina, so it's very hard.
Okay, last question on US. This one is for traders. Yet again, on the import side, Algeria, Turkey, and Dominican Republic are currently the top sources of import rebar to the US, not counting Canada and Mexico. Are there any other offshore rebar suppliers looking for a market share in the US? Although Ukraine has not been a significant source of import rebar to the US, with the recent temporary lifting of Section 232 tariffs in relation to Ukraine, do you foresee an increase in Ukrainian long product exports to the US once Ukrainian mills and ports are back up and running?
Well, just like we mentioned before, with the 232 exemption, you know, European mills, particularly Spain, because of the quota given to them, had some advantage. But the European prices are very high, so for them to really ship to the US, they're going to have an anti-dumping problem. So they have to be very careful on that one. On the Ukrainian thing is, it will take time for the Ukrainians, you know, to come back to normal, and then, you know, and start producing. You know, because the thing, mills like Azovstal, we probably will never see for a long, long time, you know, in the future, you know. And after the war, really, the Ukraine will need more steel than any other place. So if they're producing anything, they're going to probably have to produce it for their own consumption. And the last thing, this exemption given to Ukraine is a joke because, of course, with the reasons that they can't sell, plus, you know, Ukraine has anti-dumping, serious anti-dumping on rebar, wire rod, plates. So I don't think much will change.
So it's just on paper.
Yeah. Sounds nice.
Sounds nice, yeah. Thank you very much. So next question is for the producers. Turkish mills are struggling, particularly in long product exports these days. Do you have any estimation of when this current period may end and export trading activity may accelerate again, also taking the coming summer holiday period into account?
Well, it's like there were some countries overstocked, oversupplied, and in some countries because of the Ramadan holidays or so, the business was quite slow. And on top of that, Russian invasion to Ukraine was a big factor. Prices have increased. They had a hard time to, you know, really foresee the future a little bit. They didn't know what to do, and the local market slowed down a little bit in most of the countries. But I think today, I mean, like we're talking about Israel, it's a good example again because it's almost in the top 3 export markets for long products for Turkey. They haven't bought anything for more than a month or so. They had overstocked, the ports were congested. But last week they started to come back, and same as Yemen, they were not buying much in the last month or so. Again, last week they were in the market to buy some quantity. So I think we are in the clear in the next coming weeks. Things will be all right.
Please. Thank you very much. Next question is for the raw material suppliers. Do you expect a total halt of India's iron ore exports, excuse me, as a result of the new 45% export duty? How will this change the scenery in the seaborne iron ore market?
Yeah, as Don said, the Indian exports of iron ore is not so significant, but it's bound to have a massive effect on the availability of Indian iron ore on the exports, and support the domestic upgrading of material, of course. So it's bound to have an effect. But then you also see India normally have exemptions, and sometimes export duties are in general, but then there's specifics. So it's a bureaucratic system.
Thank you very much. Last couple of questions. No, 3 questions, sorry. This one is for producers. How do you view the current situation as regards the optional billet versus scrap for electric arc furnaces, and how would you compare electric arc furnaces and BOFs at present in terms of production costs?
Today we can see a lot of cheap Russian billets all around. That's a fact. When it comes to price comparison between electric arc furnaces and blast furnaces, when we talk about the Mediterranean part, since the scrap came down, I don't see there is much of a difference between electric cost of producing material with electric arc furnaces and blast furnaces. I think more or less should be today the same. But for this part of the world, not. I don't know about the rest.
Okay, thank you very much. Any other comments on this? No. So, last question for Raw Material Suppliers Committee. What's the current situation in the financing of trading of scrap and or other raw materials?
So, finance for the raw material side has been a very under pressure in this last period when prices have been massively strong, and demand has been strong as well. So, for example, the credit insurance systems have been very strained, and the credit insurance companies have not been wishing to take added risk on the metals industry. So with commodity prices doubling and demand increasing, it's had huge effects on the trade, where companies have not been able to insure their invoices. And when it comes to trade finance, the banking system is, of course, very sensitive to sanctions. And with Russia on sanctions, it has become much more focus and a lot more hesitance towards this trade.
Actually, trade finance is a serious issue for the traders as well. It's the same thing. When the prices go such high level, for the same amount of tons you want to sell, you want your client to have a credit, much higher credit, and usually they don't. In fact, the credit in the US is tighter than before, so really to insure your receivables became a serious problem. So it's, yes, starts with scrap and goes into the products. So trade finance, and I noticed something, that the trade finance is not on the agenda of the banks, because I guess they can make money in many other ways, and the trade finance have proven to them to be more risky than the other investments. So life is a lot tougher for the traders, a lot tougher.
Well, it's not only for traders, it's a problem for everyone, for all the sector, for the world.
I've seen only my
financing the trade, buyers, sellers, producers, whoever you name it, it's a big problem.
Yeah.
Exactly. Thank you very much. And final question from our side for today's session is for producers. With global long product prices currently on a downtrend, are prices expected to return to levels seen before the steep uptrend that preceded it? Or do market players expect them to settle at new higher benchmark levels?
I wish I had the right answer, but I will make an educated guess. I mean, we've been, since the last couple of days here, we've been talking about how the costs have increased. You know, energy costs are so high, freight costs increased dramatically. Inflation is so high. When you take all this into consideration, coupled with scrap prices, I don't see any reason why the price should go down any further.
So we have a good support. Yeah.
I think so. I mean, the way it is, I think the price, okay, a couple of dollars here and there, it's always a possibility, but I don't see the prices go down like under $700. I'm not going to name numbers, but...
My understanding is that raw material suppliers also concluded that there's a good support for the prices.
For the short term, I think there's still a downside risk because of overhang of scrap availability and a little bit of inactivity from especially the Turkish buying side. So short term, not very rosy, but longer term, I think, yeah.
The outlook is still positive. Yes. Good. Thank you very much, gentlemen. Are there any questions from the floor? Yes, there is.
Yeah, thanks for the nice, interesting comments from the panel, for sure. I have a general, I don't think it might be a question or comment. We have witnessing now a lot of challenges in the industry, and it's already on a single-digit profit margins in any case, apart from Russia, Ukraine, or US, wherein it is a protected market. Most of mills all over the world are hardly, achieving, I don't know, 2, 3, 4, 5%. We can go to the stock market and see the companies publicly listed. Now we have seen that the production cost is increasing a lot. We are seeing the interest rate are everywhere, whether it's inflation, stagflation, or whatever. Don't you think that it's a time to stop adding ridiculous capacities to the market? Because, I think, maybe in some times when you achieve 3, 4, 5% and you are having financing cost at low interest rate, that's nice. But now, and going forward, I mean, generally speaking on the short to medium term, because I think it's fundamentally a big issue to have this, all idle capacities with what's going on the production cost from one side and the financing cost from the other side, along with the demand that is not picking up, I mean, with high percentages.
But that's the situation of today. It's expected that the economies will be growing in the coming years or so. So people still be investing in iron. Iron is the main driver of economy. So I don't see why not.
I think the question is kind of country specific because in the US, we have 25% advantage for the producers. So they can easily take that nice numbers and huge profits to the bank and get financing as much as they want. So they're adding, more production, and they can get it financed. And with the new, just I mentioned, with the new trend where you really want to be regional, because you really need your material fast. So people start thinking that maybe they should buy domestic or from nearby countries instead of buying from, let's say, Turkey or overseas, because they can get it faster. We have so much shipping and port problems that traders are huge disadvantage. So domestic mills are living the best life, and yeah, they want to invest because all the problems that you mentioned is not U.S. problem or Canada problem.
Thank you. Any other questions or comments from the floor? None, I guess. So that concludes this session. I'd like to thank you very much, gentlemen. Appreciated your comments, your contributions, and all the information you have shared with us today. I also would like to thank all the distinguished speakers that who have shared their experience and knowledge with us during these 2 days. I also would like to thank you all for your participation, contributions, and your presence here. It was really great to see you all. It was really great to be able to see you face to face. So really appreciated your presence. And last but not the least, I also would like to thank our sponsors, starting with our platinum sponsors, İçtaş, Alex Stewart International, Belgian Scrap Terminal, Kocer, Almet Holding, Kardemir Steel, Koç Metallurgy, CIM Bank, and Stalex. Hope to see you in a few months' time. By autumn this year, we'll be announcing where and when we will be holding the next IREPAS meeting, hopefully pretty soon. And once again, thank you, and be healthy, stay safe. See you later. Bye-bye.
Thank you.